This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, July 19, 2026, and this is the After Hours session. Now, let's get into it. Extreme fear at 14 out of 100. That is not a buy signal, that is a warning flare. While the macro data whispers risk-on in the background, the market screams stay away in the foreground. We are staring down a week where 58% of assets are in the red, and the VIX has spiked to 18.77, signaling that the quiet has been replaced by chaos. This is not a time for optimism, it is a time for survival. We are live on Sunday, July 19, 2026. The week ahead is defined by a violent divergence. Traditional macro indicators suggest loose financial conditions and a normalized yield curve, yet the Fear and Greed Index is locked in the cellar at 14. Bitcoin is struggling at $64,637, and Ethereum is holding $1,868, but the broader crypto market cap has lost nearly 0.6% in the last 24 hours alone. With the VIX closing at 18.77 on Friday, up over 2 points, we are entering a regime where extreme fear is the default state. Historically, this level of fear persists for weeks, not days. Let's see what the data actually shows. I'm looking at the sentiment data, and it is ugly. The Fear and Greed Index is at 14/100. That is extreme fear. It has dropped from a 7-day trend of 12, meaning sentiment is deteriorating further into the red. When you see a score this low, it usually means retail capitulation is complete, but institutional caution is high.
Let's look at the charts because Pulse is right about the fear, but I need to tell you what the price action is actually doing.
I'm looking at the flows, and this is where the extreme fear makes sense. While Pulse talked about the pay IPO, that money hasn't hit the spot market yet. It's stuck in corporate treasuries.
I'm here to stress test the risk-on narrative from the macro data. Everyone is pointing to the yield curve being normal and the NFCI being very loose. But look at the credit spreads.
Let's tie this together. We have a macro regime that claims to be risk-on with a 54.5 score, loose financial conditions, and a normal yield curve. But the market is pricing it in as extreme fear with a 14/100 sentiment score.
So we have a unified view. Macro is soft, sentiment is broken, technicals are bearish, flows are squeezing, and risks are widening. Let's hear the weekly calls. The consumer sentiment is at 44.8, the lowest percentile. With the fear and greed at 14, retail is dead. I see no volume to support a rally. My call, Bitcoin/dollar neutral, I expect consolidation around $64,000 with a bias to test $62,500 if the VIX holds above 18. No directional conviction.
The closing Marubozu on July 16 was a strong signal. The Harami on July 17 was a pause, not a reversal. Ethereum is breaking down. I am calling the downside. My call, Ethereum/dollar bearish, target $1,800 by Friday close. The 3 outside pattern confirms the breakdown.
The funding rates on XRP and Dogecoin are unsustainable bubbles. 7.3% and 8.5% annualized in a fear market. That's a liquidation event waiting to happen. Once Bitcoin breaks support, those longs get wiped. My call, XRP/dollar bearish, target $1.05 by Friday. The leverage flush will drive it below current levels.
Credit spreads are rising. VIX is spiking. The risk-on narrative is failing. I'm looking at the tail risk. My call, Bitcoin/dollar bearish, target $62,000 by Friday. The 95% VaR suggests a 3.7% daily drop is normal in this vol regime. A 5% drop to $62,000 is within the 99% VaR range and highly probable if the $64,000 support fails.
The macro tailwinds are real, but the market is ignoring them due to liquidity constraints and geopolitical noise. The path of least resistance is down until the VIX compresses. My call, Bitcoin/dollar bearish, target $63,500 by Friday. I'm not calling for a crash, but a slow bleed as leverage unwinds.
3 bearish calls, 1 neutral. The market is pricing in downside. Let's recap the levels. Bitcoin support at $64,637 is critical. Ethereum breakdown at $1,868 is accelerating. XRP and Dogecoin leverage is the canary in the coal mine. If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Crypto markets are highly volatile. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.